Hello friends, welcome back to my channel FMEG India. Today we are diving deep into the Polycab India's Q1 financial year 26 results. We will check if it missed or beat the street estimates, financials, management commentary and what investors should do. Before that, please subscribe my channel FMEG India. So good news for the Polycab investors. Polycab India delivered an exceptionally strong performance in Q1 financial year 26, showcasing significant growth across its core business. The company reported a stellar 50% year-on-year increase in net profit, reaching Rs 592 crore in Q1 financial year 26, up from Rs 396 crore in same quarter last year. Revenue from operation also saw a robust rise of 26% to Rs 5,986 crore from Rs 4,756 crore. Earning before interest, tax, depreciation and amortization surged 46% annually to Rs 938 crore, leading to a notable improvement in the EBITDA margin by 220 basis points from 13.49 to 15.66. So let's discuss what analyst has to say. While specific Q1 financial year 26 analyst estimates were not explicitly available, analyst has recently increased EPS estimate for future period by 12% and forecasted annual earning revenue growth of around 14.5 to 14.6%. Polycab reported 50% PAT growth and 26% revenue growth, significantly exceed this general analyst growth forecast, indicating a very strong performance and a notable beat. Inder T. Jayashangrani, Chairman and MD of Polycab India, stated that the company commenced financial year 26 on a strong footing, delivering our highest ever first quarter revenue and profitability. He expressed confidence in the company's ability to capitalize on future opportunities, citing continued momentum in government spending and improving project execution on the ground. Now let's discuss about the company's outlook and business growth. The strong performance was driven by the wire and cable segment, which achieved 31% year-on-year growth. This was fueled by sustained domestic demand, higher government expenditure, and improved project execution. The domestic wire and cable business grew 32% year-on-year, with cables outperforming wires, and both channel and institutional sale showing healthy traction. The fast-moving electrical goods segment also continued its healthy growth trajectory with an 18% year-on-year increase, making it second consecutive profitable quarter. With FMEG solar products saw exceptional growth, more than doubling year-on-year, became the largest category. Polycab's strategic program underpinned this robust performance. Project Leap, a multi-year transformation journey successfully concluded, achieving its $200 billion revenue goal a full year ahead of the financial year 26 target. Building on this success, the company launched Project Spring, a new multi-year strategic program for the next 5 years. Project Spring aims to grow the wire and cable business at 1.5 times the industry growth rate, targeting market share gain and achieving a long-term EBITDA margin of 11 to 13%. It has sought to increase international business contribution to over 10% of the top line and grow FMEG revenue at 1.5 to 2 times industry growth, targeting an EBITDA margin of 8 to 10%. To support these goals, Polycab planned to invest 60 to 80 billion in capital expenditure over the next 5 years for capacity expansion, backward integration including an EHV cable production facility in Halol by financial year 26, digitalization and ESG initiative. These investments are planned to be funded through internal accruals with a commitment to increasing dividend payout to 30% or higher. So Polycab's Q1 financial year 26 result demonstrate effective execution across its core segments, with the wire and cable business directly benefiting from favorable macroeconomic tailwind such as government capital expenditure and robust real estate demand. The sustained profitability of the FMEG segment is particularly noteworthy, indicating a successful strategic alignment and product premiumization initiative. This turnaround in FMEG is crucial as it diversified revenue streams and enhanced overall profitability, reducing sole reliance on the wire and cable segment. The company's sustained capital expenditure plan and its commitment to funding this through internal accrual underscore strong cash flow generation and a confident outlook on future demand. This strategic position is expected to drive continued market share gain in both the organized wire and cable and expanding FMEG market. Now let's talk about what investors should do. For investors, Polycab share ended 1% lower than the earning announcement, possibly due to profit taking following recent gains, 10.44% in the last month. However, analysts largely maintain buy ratings with target price indicating significant upside of rupees 8,300 to 8,741. Despite short-term stock fluctuations, the strong fundamental, clear strategic direction and positive long-term outlook from analysts make Polycab an attractive position for those seeking exposure to India's infrastructure and consumption growth story. While risks include fluctuating raw material prices and increasing competition, the company's market leadership and strategic initiatives are positioned to mitigate these challenges. If you like the analysis, please hit the subscribe button and press the bell icon, and do subscribe to my channel. Thank you and Jai Hind.